Inside a container ship, the hidden economics of a 2,500 TEU feeder. I am Chris. Inside a 2,500 TEU container ship, operating costs, profit margins, and payback reality. When we talk about global trade, the humble 2,500 TEU feeder container ship is the workhorse connecting regional ports to the world's megaterminals. But beyond the steel and the sea, what does it really cost to operate one of these vessels day to day? In this episode, we open the books, from bunkers and crew wages to loan repayment and payback time, to show what keeps a ship profitable, or not. A 2,500 TEU feeder typically measures about 200 meters long, powered by a slow-speed two-stroke diesel engine burning low-sulfur fuel oil, or LNG. It trades between regional hubs, Lagos, Tema, Abidjan, feeding boxes to deep-sea liners. In 2025, such a ship charters at around $25,000 to $28,000 per day, depending on route and fuel efficiency. That may sound like good business, until you see the expenses behind each voyage. Let's break down the annual operating cost of a 2,500 TEU vessel. Fuel, $5 million to $6 million per year. The engine burns about 35 tons of fuel a day, at roughly $500 per ton. Crew wages, around $1.2 million, which covers 18 to 20 seafarers, including travel, training, and welfare. Insurance, about $400,000, which covers hull and machinery, P&I cover for the ship and its liabilities. Maintenance and spares, $700,000 to $800,000, which includes dry dock funds, class inspections, and constant machinery care. Lubricants and stores, roughly $400,000, which includes oils, filters, and daily consumables. Administration and overheads, $300,000, which includes technical management, communications, and software. Altogether, annual OPEX runs $8 million to $9 million just to keep the ship moving, before financing or profit. Revenue and margins. At a charter rate of $26,000 per day, yearly income is about $9.5 million, and subtract operating expenses of $8.5 million, and you're left with $1 million profit before interest. In good markets, say $30,000 per day, profit can rise above $2 million. But when rates fall below $18,000, the owner could be running at break-even or loss. Utilization is everything. Every empty slot means lost revenue. Financing, interest, and inflation. A new-build 2,500 TEU ship today costs about $50 million to $52 million. Most owners finance 70% by bank loan, repaid over 10 years at around 6% interest. That's roughly $5 million per year in debt service. Add that to operating costs, and total cash outflow hits $13.5 million annually. To stay solvent, the ship must earn over $37,000 per day. Inflation adds pressure. A 10% rise in fuel or a 5% bump in crew wages can erode over $1 million of profit instantly. Even a 1% change in interest rate swings financing cost by $350,000 a year. Payback periods. At current market levels, a new 2,500 TEU ship takes 10 to 12 years to pay itself back. Buying a 5-year-old vessel at $28 million shortens that to 7 to 9 years. An older 10-year unit at $21 million may recover cost in 6 to 8 years, assuming steady employment. The lesson: success in container shipping isn't just about moving boxes. It's about timing the market, controlling fuel, and managing debt wisely. Behind every voyage lies a balance sheet of risk, cost, and precision. The 2,500 TEU feeder may look ordinary, but it's a masterpiece of financial and technical discipline. This is SeaMayors Maritime, revealing the real economics of life at sea. Like, subscribe, and share.